yesterday. Okay, just let us know. Okay.
Yeah, it's usually the first session at 10 a.m. Is a session where some people struggle to wake up for. Is that correct, Alex?
Yeah, that's right. But and it's Sunday. But anyway, just wanted to thank you guys, okay, for being here and being online today. Okay, because it's Sunday. You could be sleeping, nice weather to sleep, but you choose to attend our session today. Okay, I can see that Linda, Dave, EL, Ju Kim, saying hi to us, Zixiang, Katie, and such. Okay, a very good morning to everyone. And yeah, right now we are into the session proper. It is already 10 a.m. in the morning. So back to you, Jeremiah.
All right, so let's go ahead and get started. So as we've mentioned, Alex and I, this is our very first session of the very first event of the year, Market Insights Virtual Summit for Q1 2024. And Alex and I were just talking about yesterday how fast 2023 has been, and we're all very excited looking forward into 2024. But of course, one thing that's very important for all of us out there is that with 2024, there's going to be changes in the market. There's going to be some macroeconomic changes this year, and it's very important to then look forward to the right trading strategy for 2024 and the right plan. And that's why we want to kickstart 2024 with the right event, and hopefully this event would be the one that helps us get that. I noticed my screen. Okay, let me share again. Can you guys see it on the screen?
Yes.
Okay.
And once again, just want to thank our sponsor for this event, Plus 500, right? They are a MAS regulated sponsor, and they make this event totally possible, okay? And they are a CFD provider. They provide more than 2,000 instruments, okay, such as shares, options, commodities, and indices for you to trade all these products, okay? So yeah.
Correct. And we'll talk a little bit more about Plus 500 later, and the promotion that we're running together in collaboration with them. But also, I want to give thanks to the organizers, of course, of the event, MarketWise Asia, and also some of our media partners below that you can see on screen. Of course, we have BK Forex. We also have eSmart Academy, Swim Trading, the Systematic Trader, as well as last but not least, the Joyful Investor. So thank you all of our partners and our sponsor Plus 500 for making this event possible. Now, first things first is that, here at MarketWise Asia, one thing that's very important here is that we're trying to build a community of traders that help each other with their respective strategies and with their respective journeys in trading. And that's why the different channels that we use to build this community is very, very critical. And we do encourage that you join all these different channels. These channels are channels like Facebook, Twitter, YouTube, as well as Telegram. And what we do there is we share a lot of event updates, upcoming events, and we also actually host weekly market outlooks. And I think Alex on his Twitter, he also shares a lot of information, and he also hosts every week on Monday evening a market update. Is that correct?
Yes, that's right. So every Monday evening, in fact, that is tomorrow, I'll be doing the Facebook and YouTube stream as well, where I talk about market outlook. Also, I'll give you what's the latest market price movers and such, and also trade ideas as well. So do follow, like, and subscribe to our Facebook page and also the YouTube channel. And if you could, okay, if you have Twitter, Telegram, just follow us as well. I have already posted the link in the chat in case for those who just joined. Once again, I'll repost it in the link in the chat link as well.
All right. Now, last thing is the promotion that I'm mentioning a few minutes ago. So as Alex has mentioned, Plus 500. If you guys don't know Plus 500, maybe let me share a little bit more about who our event sponsors are. So of course, Plus 500 is a global CFD provider that's actually publicly traded on the London Stock Exchange and also part of the FTSE 250 index. Now, you might find their name familiar because they are actually the sponsors of some of the largest football or sports teams in the world. One example would be Chicago Bulls, which is the place in the NBA in the United States. And they also sponsor other teams like BST Young Boys, who are playing in Switzerland, right? But above and beyond that, Plus 500 is a CFD provider that offers over 2,000 instruments, all right? These are instruments ranging from indices, from forex, from crypto, from options, and these are all instruments that you can definitely find in your and add to your trading portfolio. But also the application itself features some very interesting features. One of which is that it's available both on desktop and mobile with the exact same features, so you can actually trade on the go wherever you are without the need for your desktop. All right, and also it features zero commission, as well as the latest and new feature of the application, and that is the insights, where you can actually view and look at what other traders are doing or adopting in their trading strategy. All right. So in collaboration with Plus 500, we are running a promotion right now. So you can see on screen that if you actually open a new Plus 500 account and you fund the account with 500 Singapore dollars, what you do get, first of all, is the Seasonal Advantage FX report. This only by opening the account will you already get it, and it's worth $48. And it also gets the official Chicago Bulls cap and a bonus of $250. Now, I know it sounds like a lot, but if you wanted to really look into the detail, all you need to do is head on down to our website and go over to the virtual booth segment, which you see on the screen right now. And if you scroll down, you'll find exactly the promotion that I'm talking about, the $250 bonus, as well as the official Chicago Bulls cap. And this is applicable for not just Singaporeans, correct, Alex?
Yes, that's right. So this is also applicable for people residing in Malaysia. So if you are residing in Malaysia, you just need to fund 1,500 ringgit, okay, and the bonus is 750, okay, but of course terms and conditions apply, but you will get the Chicago Bulls cap as well.
That's correct. One thing that's very important to note is that when you are creating your account, after you've created your account and you're funding your account, please make sure to use this bonus code that you see on the screen, which is Summit 2024. Why do you need to do that? You need to do that so that we are able to see from the backend system which are the ones of you that we are going to issue the rewards, both the bonus as well as the Chicago Bulls cap. So please put in the bonus code Summit 2024. All right.
Yeah, just to add on for the Seasonal Advantage FX, right? This report is provided by MarketWise Asia, that is us. Okay, so we need to gather the list from Plus 500 first before we can send out all these bonuses to you. So please give us some time. So this report is not instant once you open the account or fund the account. So please give us some time. And also, once again, the Chicago Bull cap, right? They also need time to deliver it to you. So please give us some time for them to send the items to you as well. Okay, and I can see Edmund from the chat, right? Bonus for multiples of 500 there is. Okay, you might head over to the link over there and check out other bonus code. But okay, let them know that you are from Summit 2024 so that they can send the cap to you, because this cap is only exclusive for this event and there is no credit card charges. Okay, so there's no deposit fee. Okay, if you deposit 500, it'll be 500. There's no fee from that. Okay, back to you, Jeremiah.
All right, and so with that, let's get straight into our first session of the day. So, of course, the person coming on to speak, our first speaker of the day is someone that you might be very, very familiar with. He's been a very, very honored guest on this event for the last couple of events that we've held, and it's none other than Boris, who is the managing director for BK Asset Management. I see that Boris has just turned on his screen, but let me do a quick introduction of Boris before I pass the time over to him. Now, Boris, most of you will know him, but for those that don't, let me do a quick introduction. Boris is a leading foreign exchange expert with more than 20 years of financial market experience, and he has been featured on multiple media outlets such as CNBC and Trading Nation, and his daily research is widely quoted by multiple contributors like Reuters, Dow Jones, as well as, honestly, too many to count, right? But a little bit more of his experience. Right now, he's the author also of Technical Analysis of the Currency Market and Millionaire Traders, How Everyday People Beat Wall Street at Its Own Game, and both of which are published by Wiley, actually. And his extensive experience in trading and developing momentum-based techniques has really provided the foundation for BK Forex's strategies. All right. Boris is a bit of a Twitter celebrity as well. So you can also follow him on FX Flow on Twitter. And today he will be talking about how to make great swing trades in indices, gold, and forex, and have them traded automatically. All right. So with that, let me pass the time over to Boris. Boris, do you want to say hi to everyone?
Hi, everybody. Everybody hears me okay? Sound is good? Everybody
Yep,
sees
everything
me?
is good.
Very, very good. All right, guys, good to be with you. I'm so happy to be here. It is much worse in New York than it is in Singapore today. It's 19 degrees Fahrenheit, which I don't even know what that is in Celsius. It's like something like minus 20 or something. It's
Oh.
freezing.
Oh,
So
it's
we,
minus 20.
sorry?
Is it minus negative 20 or the
I think so.
temperature?
That's what it is what it is. So it's cold. It's just cold in New York. That's what it is. So we're all staying inside, nice and cozy. And I'm glad to have you guys with us. Should I share my screen? Can I?
Yeah, we'll pass the time over to you, and then we'll catch up with you for Q&A shortly after. All right.
Okay, sounds good. Sounds good. Let me share my
Wow.
screen. I'm going to share my screen over here. And you know, first order of business, I'm actually to make it easy, guys, I'm going to go off the screen because the presentation I have for you guys today is going to be all chart based. We're going to talk strategies. We're going to replay trades. We're going to live trade strategies inside various different markets. And I kind of want to just be looking at the screen along with you. However, absolutely feel free to chat me and ask me any questions you like while you are while we're talking. But I'm going to just take myself off the screen so that you guys don't see me twisting around, because I'm going to be just as focused on the screen as you guys are, because we're going to share all the kind of strategies that I want to do with you, and then I'll come back at the end. We'll do a little bit of Q&A. Feel absolutely free to chat me. Let me just make sure I get the chat box over here. Yes, I have the chat box over here on my other screen. So I have the chat box on my other screen. So I'll be watching your chat. If you have questions, feel free to ask me in the middle of our conversation. This is really going to be just a conversation between friends, not any kind of a formal presentation, because I kind of want to go through the stuff that the latest stuff that we're working on right now in BK that I think you'll find very, very interesting. So first order of business, I just kind of wanted to tell everybody, you can still find us at BK Forex, but we've actually changed our brand to BK Traders because we no longer only trade Forex. We've expanded into all the other asset classes, and that makes it a lot more interesting and a lot more diversifying for many of you who are trading CFDs. And I'm actually curious, type in the chat if anybody trades other assets besides Forex. For example, does anybody trade NASDAQ or US 30? Does anybody trade gold? Just type in the name of the asset. I'm curious to see what you guys have to say in chat with the assets that you're trading, because we're addressing all those markets, and I'm going to show you some really interesting strategies to all of those markets. That being said, of course, my partner, Kathy, she's really the FX queen, and I have really kind of focused my attention much more on indices. So, the conversation there's somebody saying NQ, good for you, my friend. NQ is for the true degenerate traders. And speaking of degenerate traders, we do a couple of things in BK. The topic of my conversation with you guys today is going to talk about swing trades, the strategies that we've designed for swing trades, and how we automated them, all that good stuff. And probably majority of you are much more interested in that, and that's fine. Believe me, I will give you more than enough to chew on as far as the swing trading goes. That's part of my business, or that part of our business is called Gladiator. Every single Thursday, we get together, we have a live webinar where we review the strategies, review our portfolios, tweak the strategies. And this is literally what I'm going to be showing you as our, as our best trade ideas. But in addition to that, every single day, without fail, Monday through Friday, except for holidays when the markets are closed, we are day trading. And I thought, you know what? These guys really need to hear about my day trades as well as my swing trades, because I'm sure they're going to find them just as interesting. You will, hopefully, for those of you who are, I'm actually curious, anybody day trading? Let me know if I just say day trader or intraday trader in chat. Because if you're day trading, this is our bread and butter. So I kind of going to start with my day trading strategy just to whet your appetite. And then I promise you we'll get serious and we'll talk about swing trades. And I'll show you some really, really interesting serious swing trades. So without much ado, the strategy that we really, really work on every single day, it's called bounce. And it is both a trend strategy and a fade strategy. Does anybody know what the word fade means? I'm actually curious. There's somebody called Contrarian Trade Investor. So I would imagine he would know what the word fade means. Let me know in chat. Can anybody define the word fade? Yes, no? Okay, I'll tell you. Fade is just simply a trading term. Interesting, nobody knows. Okay, so this is an old fading term from the pits. It simply means nothing more than just going against the market. It's selling tops, buying bottoms. Okay, selling tops, buying bottoms. Something that everybody tells you not to do. We do this every single day, and I'll show you exactly how we do this. But that's, so that's the fade component. That's the contra trend part of our strategy. And then we also have a trend part of our strategy. And this particular trading view indicator encompasses all. This whole strategy encompasses all. And I'm gonna play it out for you, show you exactly how it works, and show you exactly what we do. So the thing, by the way, you hear the sirens. I mean, maybe you don't hear the sirens, but you're going to hear sirens all day long in my webinar. I don't think there's been a one MarketWise webinar where we've had that there has not been police sirens outside. I am 11 stories up, but we are next to a fire station and we're on Broadway, and it's just, just never ending sirens 24 hours a day here. It's just life in New York. So if they will go away, I promise you. What we do is something, I think, seemingly extraordinarily simple, but it's actually unbelievably effective. The first order of business in our strategy is we take the days, this is the full 24-hour cycle, the global trading day. The global trading day starts at 1700 hours New York and ends at 1700 hours New York, 5 p.m. New York to 5 p.m. New York, which I guess is going to be 5 a.m. Singapore, 5 p.m. Singapore, right? Just the flip side of it. That's the global trading day. That's what FX is settled on. That's what CFDs are settled on, so on and so forth. Now, when it comes to indices, it's a tiny little wrinkle, because indices like US 30 or NASDAQ or anything else are actually traded off the futures markets. And because the futures markets are traded only 23, not 24 hours a day, what happens is in Chicago, at 4 p.m. Chicago, which is 5 p.m. New York, till 5 p.m. Chicago, which is 6 p.m. New York, they shut the servers down. They got to process all the trades, and then they start them back up. There's like a 1 hour tiny little pause. So when you're looking at indices, they trade only 23 hours. That's why all your brokerage quotes will stop for an hour and then they restart. But when I say we're looking at the all-time highs for the day, it's on that 23-hour cycle, right? It's not the New York Open, it's the global trading day. That's what we're trading, because this is literally, most of the indices, of course, and all products at this point are truly global in nature, and all of those highs and lows matter. And you can, just to show you, I'm going to go into replay mode. I'll be doing a lot of replay mode just to show you what the instrument looks like dynamically. What you will see here as the instrument trades is if it makes fresh highs, that green line, you see that green line? That green line rises. That green line rises. That middle line adjusts, and obviously the red line stays stationary. So the first order of business you need to appreciate is that the indicator divides the day into essentially an up zone and a down zone. It's like if you're playing soccer or football, in Asia. This is like the offense. This is sort of the winning side. This is the defense. This is the defense side, right? It's kind of like a football field. If you're playing American football, it's the exact same thing. If you're playing rugby, same kind of thing. But if any of you who have any kind of a sport knowledge, it becomes very, very obvious. This is the midfield. We cross the midfield, we're in the up zone. We drop below the midfield, we are in the down zone, defensive zone, right? Selling. To translate it into trading, if we're trading trend, if we're above midfield, we're in the buy zone. If we're trading trend and we're below midfield, we are in the sell zone, right? Pretty simple idea, but very, very effective. Now, why is this like a million times more effective than moving averages, Fibonacci levels, Gann, Elliott wave, any other indicator you can think of? And I'm really going to restrain myself from my potty mouth, and I'm going to try to keep this as clean as possible. Those of you who day trade with me every single day know I am a New Yorker, so I have the worst potty mouth in the world, and I'm really going to try to control it. But anyways, what I was going to say is that all of those indicators are not real. Not real in a sense that they can be completely and arbitrarily adjusted by the trader. 10-period moving average versus a 20-period moving average versus a 30-period moving average. Why one versus the other? Just because you choose it, right? There is no objective measurement of what is support. Is support at a 10-period moving average? Is it a 50 moving average? Is it a 200 moving average? It's just your view. Fibonacci, from high to low. Which high to low? Is it the swing high to low? Is it the wick, or is it the body? Is it this? Is it that? There's 100 different, completely subjective ways to measure support values, to measure decline values, right? You guys with me on that? It's incredibly inaccurate because it's all human-based and subjective. What makes this layout so powerful is it's incontrovertible. You cannot fake the day's high. You cannot fake the day's low. You cannot fake the day's middle. Those are all calculated by the actual market prices. They're all going to be the same the world over. There is no debate. There's no debate. So this makes it, in my opinion, a little more meaningful as levels from which we can trade from, right? That's sort of like the basic underlying assumption of what we do every single day. Now, the indicator does a couple of things. It provides like a little dashboard over here, and I'll go through the dashboard and explain to you everything that it has. And most of this dashboard is informational in its nature, but some of the dashboard actually inputs into how we're going to trade, into the strategy itself. So I'll explain in just a minute. So first and foremost, the dashboard tells you, what is the high, what is the midpoint, what is the low at our particular time. So like, for example, let me just go back into replay mode here, right? Oh no, sorry, we'll go this way. Just go right before here. Now, what you'll notice is it says the high is 37,595, right? And I'm going to move this over and just, you'll watch it. Now, if I go into replay, what you'll notice is that the high gets bigger. I'll stop it. You see how the high updated to 37,636? All of this is dynamically updated for you. So it tells you the real-time information based upon the absolute latest data. It's kind of useful, right? So this just tells you the high, midpoint, and low, repeats this information, nice, visual format, but it also calculates the range. And the range is an interesting concept because the way we define range, now most people, you would define range, the traditional way people define range is yesterday's close to today's close, right? Yesterday's close to today's close, right? Which is like, comes out of, individual stock trading world. Or you could even do it, against FX, yesterday's close, today's close. We're not really interested in that. What we define the range is how much is the travel, what is the travel from the absolute low today to the absolute high, divided by the nominal value of the underlying. How many total basis points? A basis point is 1/100th to 1%. So 60 basis points, for example, is 0.6 of 1%. it's a pretty decent range for the US 30 already, at 7 o'clock in the morning on Friday. So we've already done about more than 0.5% traveling up and down. Now, the reason why you want to have as big a road, as wide a range as possible, is because the bigger the road, the more wiggles in the road there are, the more little wiggles in the road. And what we're doing as traders, we're just trying to trade those little wiggles, whether they be maybe long journeys or short journeys. The wider the road, the more the opportunity is for us to trade the wiggles. And the wiggles is where we make all our money. So when there's no range, there is no movement. When there's no movement, there's no trading. Very important to remember that. Very important to remember that, because I think people really, really forget it, right? Then the next element on this dashboard, it tells you, so we're trading this on a 1-minute chart, where we are day trading this on a 1-minute chart, right? And by the way, feel free to ask me any questions that you like. I don't see anybody typing anything in chat. So, if you have thoughts, please feel free to pass them on. I'm happy to answer them. So as we're trading this on a 1-minute chart, I'm a firm believer that the one thing you want to do is either be in sync or be against the bigger time trend. The bigger time trend is going to control like a magnet. It's like think of the bigger time trend as the sun. The sun has far more gravitational pull than the moon, right? Or anything else. And the bigger time trend is going to have more gravitational pull on the chart. That's very, very important for us. So we're always mindful of what the big, the 1-hour trend is, because we're always trading either against it or with it. And I'll tell you exactly how we trade against it or with it. And then finally, it also tells us how old this trend is. Now, this is telling it to us in 1-minute charts. So at this point, the bullish trend is about, what is that, 60 minutes, 900, but 15 hours long. That's pretty young. It's a pretty young, fresh trend. When we get into like 4,000 or 5,000 bars on a 1-minute basis, that's when the trend kind of gets old, right? And that's important, because when a trend is young, you really, really, really don't want to fade it, to go against it. But when the trend gets old, that's pretty much a good time to maybe consider shorting it. Remember, to go against the trend is to find, I'm going to get to the red and green. That's the secret sauce. I'm saving the red and green for the last, because that's the most important part. Okay, I'll get to the red and green. Don't worry. I will not leave out any details. I'm giving away the whole story here. Oh my God, you know what? I got to rock and roll. I didn't realize this is taking a little time. So don't worry, I'll get through this. What I was going to say is, I lost my train of thought. How old the trend is. So the whole point of going against trend is exhaustion. When you're fading, you're basically saying the buyers are exhausted or the sellers are exhausted, and that's what you want to do, right? So the older the trend, the likelier it is going to be a good fade for us, right? And the younger the trend, the more careful we have to be. Now, somebody's asking me the single most important question. So let me just sort of, before I get to that question, let me just give you some demarcations of what this means. So the little blue circles is the all-time highs or the all-time lows at that time. So in other words, at 6 o'clock in the morning on Friday, this was the high, then it made another high, it made another high. See, it's making it's making fresh highs, fresh highs, fresh highs. All that's marking is just fresh highs or fresh lows, okay? So the blue circle is just an informational circle. The little red triangle is actually a point at which we want to be short. We want to be selling. Now, we're trading very, very, very tiny, small scalp trades. Our trades are 1 basis point of the notional. So what does that mean? The notional here is a $40,000 product. We're going to round everything up to the nearest zero. So $40,000 product. 1 basis point. Sorry guys, the fire brigade is starting. $40,000 product. 1 basis point is 40 points. So in the US 30, we are trading with a 40-point target and a 40-point stop, right? And I'll show you how that, how that plays out on the charts in just a bit. But that is what we're trading here as a as an instrument. And so these are sell points. Now, let me see if I can find you. Okay. And these little wider labels are actually trend points. These are trend trades, trend trades. These are counter trend trades, and these are trend trades. So in this particular, and the reason why, this looks like red and it's a sell trade is because at this time on the 18th of February on Thursday, the US 30 was actually in a bearish trend and we were selling this. So let me explain to you very, very simply the basic setups, and then I'll explain to you the red, the green and the red stripes. There are two setups that we trade. The trend setup is what we call the bounce mids, and I'm going to show this to you in replay mode right now because we might as well get into the mids. Hang on, we'll go into the mids over here. So as you can see, the trend is bearish. Let me stop this over here. The trend is bearish. And our trend setup is if price is coming from the upper zone and breaks the mid, what we call the mid, right? We want to be short that trade. We want to be short that trade with a 40 target and a 40 stop. So in this particular case, we would be selling around, 350, 253. And our stop would be right over here, like in the 290s. It's early. You can see the little red arrow and the green arrow, which is the stop and targets of this particular trade. Now this trade, we'll have to see how long whether it actually resolved for us. No, it doesn't look like. So we get stopped out on this trade. So in this particular case, the trend trade goes maybe 30, 40 points in our direction, but doesn't quite hit our target. So we get stopped out. No problem. No biggie. I'll explain to you what we do next. But that is the trend trade, right? Now, the next trade that I want to show you is, well, we won't get a reversal trade here. Trend is bearish. Okay. So in the bearish trade, so here's where we get the reversal trades. The reversal trades is when the trend is bearish, selling. Everybody's selling. We actually want to be buying. We want to be buying the bottoms. And we have a very specific algorithm for how we want to buy the bottoms. It's got to make a bottom. It's got to bounce back. And then it's got to sell off again, but not quite make the bottom. If it doesn't quite make the bottom, we're going to be buying at that next sell off. Okay, like you see, so let me finish this off. Here, it made a bottom, sold off, but didn't quite make the bottom again. It triggered a buy point for us on this green triangle. We got long. This is our stop. This is our target. We make our target. Boom, we're done. That's our reversal trade. So I showed you a continuation trade, a trend trade, and a reversal trade. We just missed on our continuation trade, but we made a target on our reversal trade. That's literally all we do all day long. But that's not how we succeed. We succeed because we do two things that are, I think, incredibly important. And this is what I wanted to share with you guys on the day trading basis. And then we're going to get into classic, clean, simple swing trades. First order of business, as somebody pointed out, who was it? Steven pointed out, what is this green and red zones? This is the single most important thing that I think we've done in our day trading. You have to understand, I think, let me put it this way. The single biggest mistake that people do when they're day trading is they treat the market like a restaurant or a bar, right? They walk up to, or like a casino, they walk up to it any time of the day and they're like, hey, let's see what's on the menu. Maybe I'll try this drink and maybe I'll try that drink, or maybe I'll make this bet, or maybe I'll make that bet, right? And 90% of the time, they get destroyed because what they're doing is they are not acting with the market, doing trading as a job. Now, everybody always tells you, oh, trading is not a job. The beautiful thing about trading is it's not a job. It's exactly the opposite of a job. You have all the freedom in the world. You can, you can do it at your own time. You can do it from the beach. You can do it so on and so forth, right? That's all nonsense. That's exactly the absolutely wrong mentality if you want to be successful in trading. Trading is very much a job. In fact, I would make an argument it's a job just like is it a policeman's job, a fireman's job, a nurse's job, a doctor's job. It is a job where there are shifts, where there are intense periods when you want to work, and there are periods when you absolutely don't want to touch the market, right? And the reason why is because in a global day, just like in a regular business day, you're not going to go. If you're in the bagel business in New York City, I don't know if you guys know what a bagel is, but a bagel is a very, very delicious. Oh no, we'll make it a croissant business because that's a universal pastry, right? So everybody knows croissants because everybody loves French food. So if you're in the croissant business, right, whether you're in Singapore or in New York, you're not going to be selling croissants at 8 p.m. at night, okay? Because there isn't a person in the world that's going to want a croissant at 8 p.m. at night, right? So when you come up to the market at a random time of the day and say, hey, I'm going to make a trade because I feel like trading, you're like the person who starts a business and say, hey, I'm going to sell croissants at midnight. What do you think? How do you think that's going to go? You think it's going to go well? It's going to be a disaster. So there are only 4 times during the global day when it's interesting, when it's valuable, when it's proper to engage with the market. And these are the times, the green times that we highlight. So I'm going to show them to you. You can actually set them up. They're all user-defined in our indicator, meaning you can change them. On a UTC based, on a GMT basis, it's the European Open, which in New York, I'm going to give you New York times because it's easy for you to translate to Singapore times because it's just plus 12, right? So in New York time, the European Open starts out at 4 a.m., right? 4 a.m. So from 4 a.m. to about 6 a.m., that's when we want to be trading either trend setups or fade setups or counter trend setups, right? Then the second important market time is the pre-New York Open. And the pre-New York Open is 7 a.m. New York to 9 a.m. New York. But great time in Singapore. You guys are back from work, perfect time. Like that is 2 hours when you want to do it, right? Then you absolutely need to take a pause for 1 hour. This 1 hour is the New York Open rotation. It is the deadliest time in the world. It's where more money gets slaughtered because what happens is everybody is rushing into one position or the other, and then they're flipping their decisions. Markets are super fast, and you guarantee you will be eviscerated if you try to trade during this time, as many of us have done over and over again. So what happens is there's a move in the open, right? We want to let that move pass, and it's the post New York Open, the 10 o'clock to 12 noon New York, when you get real interesting trend or counter trend moves. So session 1, right? Your shift number 1, shift number 2, shift number 3, just only 2 hours, and then stop. I beg you, please do not trade after 12. Well, it's midnight to you, so I don't have to beg you. It's pretty easy that you have to stop. Don't trade New York lunch. New York lunch will eat your lunch, as we say, if you trade the New York lunch. Don't do it. Stop until about 1400 New York. Then you have the New York close, and you can trade it again. You can come back and trade it again, right? And you can see now we have like a fade trade over here in the New York close over here. Doesn't get made. I get stopped out on this trade. And then let's see if I have another trade coming up here. And then I have another trade that pushes me higher. I get stopped out. And finally, on my third trade, you see my third trade? I finally make target. Now, so order number 1 is we trade only during sessions. Order number 2, and this is really non-conventional. So that's why I kind of wanted to show this to you as a kind of a non-conventional strategy, and then I'll get into much more conventional strategies. We do the following thing. We have the confidence that we can resolve our trades in at least 4 different attempts. So we are willing, we start with very, very small positions, and we're willing to take, if we get stopped out, like let's say we get stopped out once here, stopped out twice here, go in the 3rd time, we're willing to go 4 times into the same trade. Every time we go two times the size. So 1, 2, 4, 8. What that means is, on the rare occasions when we get stopped out after 4 attempts, right? That's a -15 trade. So we make 1, we lose 15. However, we trade like an insurance company. Insurance companies basically take very, very small amount of profit, assume a large amount of risk, but that risk is capitated, means they know exactly how much risk they're taking, and they know their odds. And so our odds are actually quite good. We rarely get stopped out more than once per week. And because we have all these opportunities across all these assets, we're probably generating maybe 50, 60 trade opportunities a week. So if you're thinking about, you're winning 50, you're losing 15, you are net positive for the week in a very large extent. And if we're doing a really good job, we generally get stopped out only once every 2 weeks. So then you're really, really doing a very, very strong P&L. So that's what we do. Now, I didn't realize I went really, really long with this particular strategy. I wanted to kind of share this with you, but I know it's such an interesting strategy. I didn't realize it was going to take so long to explain. So I'm not going to dwell more on this for now. If you guys are interested, please email me or get a hold of us at BK Traders. I'm happy to explain this to you, and I'm happy to have you in my day trading room any time of the year. You can join us for just a month, for 1 month, and give it a try. You can join us for a year. You can do whatever you like. I'm love to have you every single day. The best way to learn this, to see the actual trades in practice, to see how many people in my room are happily banking profits every single day, is to kind of trade it live with me. And because it's actually great time for you guys, we have a ton of Asian traders in my room because it's 9 o'clock at night, so it's very comfortable. We trade the New York Open. I trade basically this red area. We just kind of huddle up and talk, and then we trade this whole green area, the 10 to 10:30, 11 o'clock for opportunities, and employ our choose. So that's what we do on an intraday basis. And I think I've exhausted this strategy. There's a lot more to talk about in this strategy, but I really want to, I promised you I was going to give you some swing strategies. So let's get to that. So the other thing that we do, which is much more conventional, also quite interesting, is my swing strategies. Now, all of my swing strategies trade on the 1-hour chart, right? And I'm going to show you 3 distinct swing strategies. We'll go through some examples. We'll share we'll share some ideas, and then you guys are free to call out symbols, times, and dates, and we'll go there, because I have no idea. You can just kind of live trade with me and just put me on a spot and say, well, how did this thing trade during this particular month? And we can go and I can show you, because all of these strategies that I'm going to show you are going to show you the exact entries, the exact exits. The black little dots are stops. The blue little labels are profits. And I'm going to show you exactly what we do with this particular strategies. This is a strategy called Thunderbolt. Great, simple, clean, trend-based strategy. As a matter of fact, almost all the strategies I'm going to show you are all trend-based. And hopefully you find them, really interesting. This is a pure price action strategy. What this strategy does is it does nothing more complex than buy the 20 period, or whatever user-defined period, but we're defining our period as a, I believe in the settings here, as our 20 period. Our look back is 20 period, right? 20 period. So the highest high in the last 20 hours are the lowest low. However, and this is really, really important, I told you the central tenet of what I do is, if I'm trading trend, in the trend direction, I absolutely want to have a confirmation on a higher time frame. And we're trading the 1 hour against the 4-hour trend. So if I get a green signal, but the 4-hour trend is bearish, it's red, there are no trades. And you'll see there's lots of empty dots here where there's no trades. Whenever there's no ticket here, this is an entry ticket and exit ticket. When there's no entry tickets, that means that there was a no confluence. There was a conflict between the 1-hour time frame and the 4-hour time frame, right? Now, the other thing that all of these strategies do, which is again very classic, very, very appealing to, I think, a lot of swing trading aficionados, is these are all positive risk-reward strategies, right? Really, the first time in my life, we started this club called the Gladiator Club like last year. We designed all the strategies. The first time in my life that we have traded all of these what I call positive risk reward strategies. Because you know me, I'm a degenerate trader. I trade on the 1-minute chart. When you're trading intraday, you have to trade with a negative risk reward ratio. But when you're trading on longer term periods, you can actually put the positive risk reward ratio in your favor. In this particular case, the risk reward ratio is 1.7 to 1. So for every dollar we risk, we're looking to make 1.7 dollars in a target. And that obviously means you're going to have lots and lots of losses, right? The last and most interesting thing about the character of all these strategies is we take our stops. So our target is a function of our stop, right? This is, in other words, we don't have a fixed target. We have a target that's dynamically generated from the amount of stop we want the market gives us. And the way this works is, this is the breakout candle, right? This is, and we measure the high and the low. This is, for example, a very, very small breakout candle, right? So it's very, very low volatility. We say to ourselves, in this particular setting, I believe the setting is, we're giving ourselves 1 candle length. So the length of this candle is our stop. Now, what you'll notice is that sometimes the candle will be small, sometimes it'll be big. And the target is completely dynamic, determined from how organically this candle is based. One of the cool things about this is this takes its stops and targets from the actual organic price action that's going on. If people are really having a lot of volatility, you want to give yourself a larger stop. If they have small volatility, you want to give yourself a small stop, right? That gives you, one of the things you'll see is that quite a lot of times the stops are actually relatively small, and then the targets can be huge. So, like for example, when we hit our targets, and obviously you're going to go, like with any strategy, you're going to go through great periods and not so great periods, right? But the point is that when you go through not so great periods, you really want to control your stops as much as possible, control your risk as much as possible. Whereas when you're going through good periods, you want to just milk those P&Ls. So I wanted to just show you, from November to December, we had this beautiful, beautiful long-term trend in equities, and it was just nothing but money. I mean, the stops were tiny, 90 points, 80 points. The targets were 266 points. 233 points, literally 5 to 1, 4 to 1, kind of massive, massive stop. I think this was a 3,000 point run. I forgot. We don't have the time to add this up, but believe me, it was a really, really big run. Now we went into chop. Now we're basically in chop. But even though we're in chop, so I made 3,000 in December. I'm giving up maybe less than 100, maybe 100, 150 points, because even for these tiny little stops, I still able to make 105 over here. 319 over here. And remember, I'm not just trading US 30, I'm trading NASDAQ, which is much more trendy and which is giving me much better yields. You see NASDAQ, is giving me, even while, US 30 was not producing, NASDAQ is giving me, 150, 174, 51. I can't even see what the P&L is on this one. Basically maybe about 500 against what, 42, 24, 139 is the one big stop I had here. It's just the one big stop. So if you add all this together, it's probably $200 worth of losses against probably $500, $600 worth of wins. Very, very net positive on the trade. That's the key to how I trade Thunderbolt. And it's incredibly positive because we traded live. I'll show it to you. Let me see if I can bring this Oh, I wonder. Oh, I can't share my screen. Oh. Okay. You know what we can do? I'm going to share my screen. I just realized because we're in hang on. We're in for a sec. All right. I just want to give me a second, guys, because I don't want you to think that I'm pulling your leg. Launch app. Let me see if I can do this through the. I think I can do this. Web browser. I think I can show you. Yes, I can show you my P&Ls. So perfect. You guys can see my P&Ls. So this is a $100,000 account, right? And we started trading this about a month ago. Like I said, the Gladiator Club really went live just sort of like at the end of November, right at Thanksgiving U.S. time. Now I am trading this tiny. We're trading a 1/10 of a lot. You can see all the positions here are a 1/10 of a lot, right? That is an incredibly small position relative to the account size. So and the reason why we're doing this is because we're weaving in multiple instruments and multiple positions, and I'm being very, 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 very conservative. So you're talking about, basically 1% on a tiny little base. But if I was really trading this for real, like if I was trading my own account, in terms of fully matured, you could trade 10 times that. So you're talking about literally $9,000, 9%. Anywhere between 9,000 and 900 is whatever risk level you have. But the point is, you already have massive amount of data, and the massive amount of data is showing you the P&L really works, right? This is not the full data. If I go to let's do custom period. Yeah, I think we can go from December 1, these one. And you see how many, there's like a lot of trades, you see the trades, right? And all these trades are taken. So I just wanted to kind of, I didn't want you to think that I was pulling your leg. That nothing that I'm showing you is just theoretical. It's not theoretical. It's actual real trades. So we're taking, okay? Anyways, what I wanted to move on to is the next strategy. The next strategy, which is a very, very interesting strategy that will appeal to all the FX traders, because I know there's probably a lot of people who are trading FX as their primary instrument, and this strategy is kind of this is what we use for our primary strategy. So anyways, let me move you over to the next strategy, which we call Stallion. I'm going to explain that strategy to you. And we're going to use, let's use pound yen, because I want to show you the strategy. So there's a couple of really interesting things about this particular strategy that I think you'll find of value. This is a strategy that uses massive shifts in breakout. This is one of the few strategies where I am actually using an indicator, but I'm using nothing more complex than RSI, right? But I'm using RSI in a very, very interesting way, which is a shift in RSI. It's very, very rare that you're going to get a big jump in RSI. Let me sort of show you the shift period. We're looking for a jump in RSI from one candle to the next that is 16 points or larger, right? That's very rare. Like, in other words, one candle the RSI is 50, the next candle the RSI is 66 or 34. Just a really, really radical shift. And the basic premise behind this is that a radical shift, obviously a radical shift in RSI is kind of a radical shift in the direction of the price. And that tends to, not always, but enough times, forecast. So a big radical shift in momentum tends to forecast the direction of the price. That's the underlying assumption that we're using, right? You guys with me on that? The cool thing about this strategy, this is the first strategy I've ever had success with. It has a 3-to-1 risk reward ratio. So the assumption here is it's going to work. When it works big. And when it doesn't work, you just cut it really, really short. We use the same principle of the organic breakout candle. So we take the breakout candle, but in this case, we say our stop is half the candle, and the target is 3 times the risk. So every single trade is obviously different because every single candle is different, and the strategy calculates that idea. So just to give you an idea of how asymmetrical this is, literally what if you've ever read Market Wizards, read about large big hedge fund managers, this is what they love to do. I'm trying to remember who was the big. Paul Tudor Jones was actually sort of the biggest proponent of this, of making asymmetrical bets. That is, where he'd bet $1 to try to win 3 or 4. It's really, really hard. I've never in my life been able to even come close to finding, because basically what happens is you bet $1 and you lose $1 10 times in a row. But this strategy is really conducive to hitting those huge targets. As you can see, we just had a trade in pound yen, which was this Thursday. It was a 3-to-1 trade. We risked 52 points, 156 was the target, and the thing hit, just blew up, right? Totally hit the target. You see the blue target over here, right? The prior trade over here was just a 31-point loss, right? Now the prior trade before that was 73-point risk, 218-point target. Look at just think about the asymmetry of the P&L here, where you're making triple digits and you're losing low double digits. You can lose a lot of these low double digits and still stay alive. So you're losing like 19 points here, 20 points there. Let me see what is the thickness here? I can't even see it because it's there's just a couple of trades here. 37 points. So you're bleeding a little bit, but when you're hitting it huge. You're just hitting it huge. And the thing that I kind of, you can just eyeball this. You can just eyeball this, through the trades, because I'm taking all the way back to September. What you see is that if you are winning 50% on a 3-to-1 risk-reward ratio, you're way ahead of the game, right? If you're winning 40% on a 3-to-1 risk-reward ratio, you're way, way ahead of the game. But where I think it's even, more interesting is that when you're winning, some of these trades can be just super, super large as far as the risk goes. Let me see where I can find it here. These are 1-hour trades, so you're not going to get. This is, I guess, pound yen was a little bit. Yeah, you could see the volatility here was very, very small. So over here, you didn't get the triple-digit wins, but you got enough of the double-digit wins to make up all of the small losses that you had here, and then you had some really huge wins as the trend developed, and that's what makes it so incredibly interesting. You can take something very simple like even the euro dollar, right? Oops. Oh, you know what? No. I don't want to do I'm sorry. I don't want to do this trade. I want to do, you only want to do this. We're basically doing this in this particular strategy. A euro dollar, I'm going to save you for the next strategy, which is really, really great for you for FX. Sorry, I'm trying to pull up pound. This one I want to show you pound, because pound was also very, very lucrative. Basically, pound, which is a very volatile pair, right? And it's you're either right and it just breaks out huge, or you're wrong and you just take small losses, is the perfect strategy. So we use pound yen as the strategy, as the pairs for this. Now, I know I'm keeping you to FX on this, right? But honestly, if you use this kind of a huge risk reward strategy on really like big volatile indices, you actually get some very, very good P&Ls here as well, from time to time that you can hit. But let's just stay on the FX side and just keep ourselves to pound and pound yen, which is what we're trading right now in our Gladiator course. And you can see that that's working very, very well. Now, the next strategy that I want to share with you, the one that I think most of you will really, really find very, very relatable, and also very, very conducive for you guys who want to trade FX, is a strategy that actually Kathy developed called X Trend. And let me pull that up because that one is actually very, very applicable to a lot of FX trades. And we can start with sort of the granddaddy of them all, which is the euro. Now, here's how that strategy works, but I think you'll find very interesting. This is Bollinger Bands, right? The good old Bollinger Bands. And they are 2 standard deviation, 3 standard deviation. This is extreme. The upper Bollinger Bands is between 2 and 3, and 2 and 3 on the bottom. So this is super, super wide Bollinger Bands, right? And Kathy has had like all these strategies where she loves to trade, inside and outside of when the price comes into Bollinger Bands. But in this particular case, what we're doing is when the price gets super extreme. In the business, this is known as walking the band. Now, most people who trade Bollinger Bands always think, oh, if it hits the lower Bollinger Band or the upper Bollinger Band, it's a sell, or it's a buy. And yeah, sometimes it is, but quite a lot of times it's actually the beginning, not the end of a trend, right? It is literally the start of a massive, massive move very often. And so when you're trading Bollinger Band, walking the Bollinger Band, or the breakouts of Bollinger Bands on a 3 standard deviation level, you find yourself into quite a lot of very, very profitable trades, especially if those trades have a positive risk-reward ratio. So in this particular case, you have, again, we're trading this on a 1-hour chart. So you're not, on a 1-hour chart, you're not going to get, huge hits because these are relatively small candles. But, what you see here is an incredibly steady, really pleasant, really low risk kind of a strategy, right? Because you're talking about 11 points. You're losing 30, you're making 31, you're making 35, losing 11. You're losing 17, you're making 28. All quite easy, right? All of it super attractive for you as a trade. I'm actually curious. Let's take a look. I haven't even looked. I haven't even looked at any of this. I was going to look at the yen. That's interesting. The yen doesn't. The yen has actually had so much volatility that hitting the 3 standard deviation is kind of difficult for it. And here's Canada is a much more conducive trade for these trades. Here you see Canada making nice green P&Ls for you. How is the pound? And the pound is the granddaddy of them all because the pound is the volatility champ, right? So I wonder if you guys now are wondering, well, this is really cool, Boris, but you said that these strategies can be automated, right? How can you automate these strategies? I want to see some people tell me, yes, I want you to tell me how to do this. I want to see some people say, I want to see if you guys are paying attention. Give me a yes in the room. Tell me that you want to hear how all of this can be automated. Aha, thank you, Stephen. Stephen seems to be the big participant today. He's really engaged. Good for him. And there's Z saying yes, and everybody else. So, okay, it's not super hard, but it's not super easy, but it's very, very doable, right? The way this works, and this is the kind of like the cool new thing about TradingView. And I'm not going to get too technical with you. I'm going to give you an offer at the end of this show that even Kathy doesn't know about. That's gonna hopefully really, really make your life much happier. The way this works, the technology that works like this, is every one of these strategies can have an alert attached. I built in alert, and as you can see, I have built in an alert into every one of these strategies. So if they go into alert on BX trend, right? You could actually go over here, X trend buy alert, X trend sell alert. You can actually configure the alert, right? Configure the alert. But more interesting than that, when you configure the alert, let's just actually do this. Let's say I'm going to configure the alert. When you go into the notification tab, there's this little URL here. It says put a webhook URL. Well, there are a couple of pieces of software on the web that will allow you to basically send the signal to your broker with stops and targets. See, the alert that I built for you actually has the code that tells you, sorry, let me just put the alert in here. If I do the buy alert, you see this has this little sort of says buy, tells you the size, tells you to stop, tells you to take profit. All of that information is passed on via webhook to your broker, and the software sits on your broker, and the broker, and it executes off your broker. That's when I showed you my account, that's exactly what we do. It's all executed automatically. Now, I'm not going to show you how to do this whole process right now, but it's not hard. It's a step 1, step 2, step 3. You can set it all up. Everybody in my club does it. And what I was going to say to you is, if you're interested, we've come to you with an offer today that I hope you really like. We come to you with an offer of a course, and I guess maybe I should talk a little bit about the course right now, because we're kind of running out of time, right? I mean, we have like 10 minutes. You know what? Before we talk about the offer and the course, let me just see if there's any questions about any of my strategies. Let's open up the floor to questions, because I don't want to run too late on any of the stuff. Let's see. I see some people trying to type some questions. So I'm happy to take all of these questions and show you. But what I was going to say to you is, the process really exists now to either you actually can do two things. Some people in my room will run a fully automated transaction where you can just send the trade and have your broker execute it. And the other way is to simply have the alert pop up on your phone or pop up on your email and say, hey, you triggered a trade, and you can just go, if you're with plus 500, you can just literally have it pop up, and it's mobile. Boom, you can put a buy and a sell right then and there with all the targets. It's going to give you the stops and targets, and you're great. You're great to go as far as the execution. So lots of different ways to do this. The execution part of it is the easy part. The strategy, the intelligence, defining the trades, that was the hard part. And having these kind of really great looking, very robust looking strategies, trading them in real time, getting positive results, that's been the greatest joy of putting together all of this stuff in the strategy. So I don't see any. Do we have any questions? Am I just waiting, or is everybody really clear on all the strategies? There's basically 3 strategies that we do. The Thunderbolt, which trades US 30, NASDAQ, and gold. Oh, I didn't. Who trades gold? I'm actually curious. You guys want to look at gold? You guys want to look at gold? We have a couple minutes. You guys want to look at gold? I know a lot of people are gold traders here. So let me show you, because I didn't even talk about gold, because that's been the money trade. Look at this. I'm going to show you gold on Thunderbolt. This is gold on Thunderbolt. So when it says 14 points, that's $14 or 1,400. Remember, this is full dollars, right? Full dollars on gold. So here you have gold in Thunderbolt over the last how many periods? Let me see. Yeah, look at this. Gold's just been a monster. It's been a monster trend. Collected like $50, $60, $70 over here. Had a few, it chopped out a little bit, not much. $8, $9 against $27, $8 wins, right? $12 wins against that, $15 wins against that, $14 wins against that, right? So at very, very worst, this month of January, which has been a month of consolidation for gold, has been essentially a break-even month, right? On Thunderbolt, right? But here's what's interesting. I think this thing works literally on every single strategy. So let me go to, Stallion. I put myself on gold on Stallion. Look at gold on Stallion. This is a 3-to-1 risk-reward ratio, right? 3-to-1 risk-reward ratio. So, where's gold? Look at the blues. 44 points, 22 points. This actually is the monster use case for Stallion. This is a 3-to-1 risk-reward ratio trade on all these breakouts. It's 20. Let me just add this up for you since November, since basically Thanksgiving. 22, 44, that's 66, right? Minus 6, so plus 60, plus 53, so 100 and 113, right? Let me just add all the blues. 113 plus another 30, 143, 144 minus 15, 130. So that is 130 gold dollars, $13,000 per one gold contract that it collected on Stallion, right? And then let me just for fun take you onto the other strategy, which is the final strategy, which I showed you for FX. I literally have never put gold in X-Trend. I'm actually curious to see what gold did on X-Trend. Unfortunately, I guess X-Trend just did not generate it because to generate three standard deviations on gold was just impossible. So you don't really have any trades. We have just one trade, basically 35 against 27, small net positive position, but not a lot of trades that that we had in gold. The absolute winner on gold is Stallion, which is just astounding, in terms of P&L. So you can really see how you can use these strategies on multiple assets, not just US 30. Who trades gold? Are these yeses to you guys telling me that you all trade gold? Is that what this is? Yeah. Okay. So, anyways, let me just take a few minutes to tell you what we have for you. So, Kathy created this amazing course. And let me, I don't know if I can go full screen. Okay, let me go the other way. Pardon my ugly pinup. You see, this is her. She created this amazing trading course, which contains a lot of the ideas that I talked about here today in terms of how to create a winning plan, all the forex sessions, tactics, and strategies. If you think I'm the only person that trades sessions or shifts, because let's say I'm a little bit more blue collar in my approach, shift like a policeman has a shift or a fireman has a shift. We all have traders should have shifts. I'm not. This is why she's very successful as I am. The key to trading is to trade only when there is opportunity. And that opportunity repeats itself every single day, but you got to know when and how to do it. So this course is going to teach you exactly how to do that, how to create a really, truly very, very strong winning trading plan, how to control your trading psychology and, create a routine. Kathy is a queen at creating routine that is incredibly successful. I've watched her literally for years, what she does, how she does it. And it's amazing. It's amazing because I'll tell you the incredible value of routine, the single greatest value of routine. You think that the value is, you're making profits. It's not. The single greatest value of having a great routine is that you can come back from losses. A true mark of a winning trader is not that he wins. A true mark of a winning trader is that he can remain calm and come back from losses. Coming back from losses is what separates the pros from amateurs. And having that information about how to create a routine, and that routine being really the reason for why I've seen Kathy, very rarely she has a losing week, but sometimes she'll have like a 250 point pip losing week, right? People just crumble under those conditions. Sometimes maybe it's even 2 weeks because the markets are just really unkind. Because she's created this incredible routine, she's really, really steadfast in her approach. And sure enough, within 3 or 4 weeks, right back to fresh equity highs. Then she also put in there some very, very interesting fundamental and trading view tools and her own personal trading view watch list of all the key information that she's put in, okay? Now, the code to get the course, the Ninja course, is MW2024, right? It's usually $699, but we, with this code, are giving you a huge discount. So because of MarketWise, because they're very, very good friends of ours, we're giving you the discount. All you got to do is either, put out this link or scan QR code. Just put your phone to the to this. It's the bit. In fact, I would recommend you just put your phone to this. This way you'll remember it. You don't have to worry about copying and pasting it. Put it in your phone, click it, bookmark it, or just take it right now. But what I'm going to do right now is I'm going to really sweeten the pot. This is USD. It says USD. It's USD. Okay, it's USD. So it's 4.99 USD. Okay. I'm going to sweeten the pot for you, though. I showed you all these strategies. I showed you how they traded. I showed you, what we've done over 50, 60, 70 trades over the last month and a half. I talked to you a little bit about the Gladiator Club, right? What I'm going to do, we're starting a new Gladiator session this Thursday. Brand new session, brand new club. We're going to get our hands dirty with these strategies, with new instruments and application of all these strategies. And if you want the opportunity to come in, now the Gladiator Club is like a $2,000 product, but I'm going to give you access to this club and have you join us this Thursday if you take if you get the Ninja Trading course as my market-wise gift to you guys. You can hang out with me. You can get access to me on Discord. You can ask me any questions you like. And if you like it, I'll make you part of Gladiator for a much lower fee than we talked about. But this will be part of the sweetheart deal. I hope that you guys can all take advantage of, because I've never offered access to Gladiator Club to anybody, even like on a guest basis. But this I will do for you because I want everybody to come in. You will have great foundation of knowledge with a Ninja course, because all of these principles that I talked to you about are encapsulated in Ninja course. And then you can get some practice and actual real life experience with me in Gladiator Club. So hopefully you like that. I'm leaving this up there for you. I think we're pretty close to our exit time. If there's any questions, I'm happy to answer any questions. Let me put my camera back on.
Okay, so thank you, Boris, for your sharing on the intraday trading. Okay, so I see one.
And swing trading, you
question.
forget. I did give him swing trades. I went through 3 swing strategies. I want to make sure that everybody who's a swing trader got their money's worth on this one, because I know I kind of got very excited about the intraday trading.
Yeah, so I can see that Yoshiko is asking, right, do we get the, maybe answer some of these question about the course over there. Okay, do we get the automated system with the Ninja course?
No, the automated system is not part of the Ninja course. The Ninja course is a full course of all of the techniques, all of the trading plans, all of the foundation for the stuff. But what you will get is an invitation from me to come see all these automated systems. And if you like it, then we'll make a deal for you on those. The Gladiator Club. The Gladiator Club is how long? The Gladiator Club is 3 months long. Okay, it's literally like a very, very intense once a week process. Everything is recorded, so people who missed the sessions can watch them on demand. But it's we're serious. Like, we hang out. There's honestly, there is no end time to this. We do it until we get the whole process right. So it's just basically Ninja teaches you the foundation, and also gives you all the tools that you really need, and then you take all that knowledge with me in Gladiator, and then you put it into the market. You actually put all this knowledge to practice. That's what I'm hoping you guys can achieve with this
Boris,
package.
sorry to interrupt. It would be great if you can share the landing page. At least they can see, what's the things they are learning in the platform and such.
Sorry, what are we talking about? Which landing page? Oh, I'm sorry, of the Ninja. So let's go take a look again. Everything that you're going to get out of Ninja. You have to understand that trading requires, it's not just strategy. Strategy I gave you are great, but they're useless unless you have a trading plan, unless you understand sessions and tactics, unless you have psychology, and unless you're really prepared with the right insights and trading tools, right? The strategy I gave you, by the way, are very interesting, and they're great, and I'm super happy at how well they're doing. But remember, we overlay all this information that you find in Ninja course into those strategies. It's not like we just trade them blind. No strategy makes money trading blind. You have to have a true understanding of all this really important underlying information about the markets, which is what Kathy put together in this course. She has been a winning trader for decades, and this is really her best knowledge. I take that same knowledge and then we apply it to the strategies that we have in the Gladiator, and we kind of get the best of both worlds. So that's why it's really, really important to understand that if you just popped into my Gladiator without having everybody who's in my Gladiator has gone through the Ninja course, has done the work. That's why it's really, really great to have this course.
Okay, so guys, right, if you really want to know what's inside the 19 video lessons, right, I encourage you to go to the site, okay? I don't think we have the time to share the landing page right now. So go over to the site and see what are the exact modules that you'll be learning, okay? Because Boris didn't share over here right now.
Sorry, I'm sharing the slide, right? The Ninja trading slide. Is that?
I mean the landing page, the landing sales page of the Ninja course.
Oh, the landing sales page from Ninja course. I'm sorry, I didn't understand you. I'm sorry, I didn't understand you. Sorry. So yeah, here's the landing page, and here's all the stuff that you have: how to create a winning trading plan, forex trading session and tactics, New York, London session and tactics, trader psychology, emotions, routine, overcoming failure. All of the key, absolutely brilliant pieces of information that you need in order to be able to understand what trades, how it trades, and where to trade it.
And PS is asking, is there any support to the Ninja course after the 3 months Gladiator sessions? Any support?
Is there any support in Ninja? I believe if you go through there's a way to upgrade to support. Yes, there's a way to kind of you can upgrade to lifetime support, and there is definitely support for that. Yes.
CP is asking how much it include the auto trading signal setup via TradingView platform.
Trust me, I will make you a very, very good deal on that. Like right now, if you get the Ninja course, you're gonna get a taste of the Gladiator session with me next Thursday, and if you like it, I will make a deal. I will make it. Like what I'm saying to you is, Gladiator usually is about a $2,000 product, and I will make a much lower deal with you because you're coming through through the MarketWise, and we're going to be able to offer you a much bigger discount. So it'll be worth your time, trust me. I wasn't even gonna do this. We were just gonna talk to you about Ninja, but I felt like that I've given you all these strategies, and that if you have the Ninja and the Gladiator down the road, you're going to be a complete trader. I just wanted to give you the full opportunity to be as complete a trader as possible. This is step one, and then you're going to come back and do step two. You absolutely need to have this. This is a course for lifetime. Like literally, the information that Kate put in here is what she has used for her life of trading. So this is what we call evergreen, right? And then you can do specific stuff with me down the road. Does that make sense?
Yes, so just a recap over there, the course is a e-course, so you can just access to the platform and view through all the modules yourself over there. And yes, I think we are ending
the course. The course itself regularly is $699. The discount makes it $499, $200 off.
Remember to enter the coupon code when you are trying to make the payment. Okay, so once you want to go to the payment, you will see the coupon code. So remember to add in the coupon code. So the price is in USD, US dollars. So $699 minus 200 off is $499. Okay, all right.
Yep.
And thank you, Boris, for
thank you guys. Thank you. It was so much fun. I hope you guys really enjoyed
Jeremiah.
Yep, thank you so much, Boris and Alex. Moving on to our next session, which is at 11:30. So actually, just a little bit of time for you guys to catch your breath and use the bathroom. Now, the next session is actually going to be delivered by Jessica Inskip, who is the Director of Education and Product at Options Play, and she will be talking about how to add yield to your long-term portfolio with covered calls. Now that's happening at 11:30 in a separate Zoom room, so please do not stay in this room. I believe Alex would have shared the next Zoom room link, so please click on that and join us at 11:30 a.m.
Yes, that's right. So I really once again post the link again in the chat, so you should be able to find the link in your email if you registered with us. So see you guys in just a few minutes time. See you later. Bye bye.
See you.